So we think there is huge demand coming into the market, particularly as we enter the fall, that's going to push prices up substantially. It's worth noting, historically, August and September are the two worst months of the year for Bitcoin. I'm not surprised that the market has lost a little momentum or stalled out right now. We still think we're going to get to that $200,000 level. We think the end of Q3 and Q4 are going to be a very exciting time for crypto.
Traditionally, Bitcoin has followed a relatively predictable 4-year cycle. We've seen this play out multiple times. Huge surges in 3 consecutive years, followed by a sharp correction. So naturally, many investors are bracing for a 2026 correction, expecting history to repeat itself. But according to Matt Hougan, that's no longer the full picture.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Historically, Bitcoin and therefore crypto has moved in these really familiar 4-year cycles. For instance, 2011, 2012, and 2013 were big up years. 2014, we pulled back 60 or 70%. And then 2015, 2016, 2017, big up years. 2018, we fell back about 60%. So the worry is that we're approaching that pullback year, right? 23, 24, 25, all big up years for Bitcoin. Could 2026 be a significant pullback? What I was saying in my article is I don't think so. I think the reasons we had pullbacks in the past have become less powerful. Many people associated the pullbacks with the Bitcoin halving, but of course, after every halving, it becomes half as important as it was in the past. Other people talk about interest rates, but interest rates in the US are likely to go down over the next couple of months, not up. So I see those forces as weaker. And at the same time, we have institutions plowing, in my view, what will end up being trillions of dollars of money into Web3 investments. And that moves over a 5 to 10 year cycle. It doesn't happen in 1 year or 2 years. So for all those reasons, I think 2026 will actually be a strong year. But it's a great question from your editor-in-chief. What does that mean for volatility? Will we still have volatility? And the answer there is absolutely. We're still going to have volatility. Now, I don't think we'll have 70% pullbacks like we had in the past. I think those days are over. I think we may have 30%, 40% pullbacks. They'll probably happen at the same time that we have stock market sharp corrections if the world enters a risk-off market. I think that's entirely possible, but I think we'll have less volatility than we had in the past. And I think we're in for a number of good years in this market. There's just too much investment coming into the space, I think, to hold prices down for very long. And I know that's a lot to say because we're currently at $114,000 or so. But I'd note a few things. One, Bitcoin's price is set by supply and demand. And right now, there is just so much new demand from ETFs purchasing Bitcoin. We see it at Bitwise, from companies purchasing Bitcoin. We think that's going to accelerate in the fall, particularly ETF purchases. Many ETF purchases are by financial advisors or family offices or institutions. They're on holiday right now. They don't tend to buy a lot in the summer. That tends to heat up in September and October and November into the end of the year. We have also seen major wealth platforms in the US, firms like Morgan Stanley that controls, I think, $3 trillion of assets, just now opening up to Bitcoin ETFs. So we think there is huge demand coming into the market, particularly as we enter the fall, that's going to push prices up substantially. It's worth noting, historically, August and September are the two worst months of the year for Bitcoin. I'm not surprised that the market has lost a little momentum or stalled out right now. We still think we're going to get to that $200,000 level. We think the end of Q3 and Q4 are going to be a very exciting time for crypto. I will say that the biggest black swan event maybe it was a white swan because I guess I could see it coming. But the biggest risk that I could see coming was one where global regulators collaborated to squash Web3 and blockchain. Um, they can't shut off Bitcoin. They can't shut off Ethereum, but they can make it very difficult for those to penetrate other markets. And for many years, they did. The US was overtly hostile to Web3 and crypto. Many other countries were overtly hostile. China took a very adversarial view against Bitcoin for a number of years. You saw miners move out of that market, and the US did the same. That risk seems to have almost gone away. The US has made a full pivot in favor of crypto. You see other countries aligning with that view. So I think the regulatory risk, which was the biggest, most dangerous black swan, has mostly disappeared. You can't dismiss other risks. You can't dismiss the risk associated with quantum computing. Maybe it wouldn't destroy the Web3 industry, but a shock advance there would really create some ripples and technical difficulties. You can't remove the risk of what I call headline risk, someone doing something bad with crypto. People do bad things with traditional financial assets all the time. But if someone did something really bad with crypto, it would attract media headlines, and that would be negative. So it's not zero, but you don't get the kind of returns you get in crypto historically without taking on risk. This risk, you just have to accept it's part of the process. It's not zero, but it's not as substantial as it was even a year ago. Yeah, it's sort of a race to the top right now. I think the easy answer 2 years ago would have been to look to the Middle East and look to places like Dubai and the United Arab Emirates, which were aggressively embracing progressive crypto regulation and did a great job with that framework. You also saw very progressive regulations in places like Singapore and many other jurisdictions. And the US was the laggard. I think the US may be challenging for that. I'm not sure if we have the most progressive crypto regulations, but I think we've had the biggest swing from anti-crypto to pro-crypto, and we're catching up with some of those leaders in the Middle East in particular, who have really been forward-thinking in this space. So everything is moving in a positive direction. The US is playing catch-up, but we're getting there. We're in a pretty good place right now.
Perhaps the most eye-opening part of Hougan's message is his reference to a recent speech by SEC Commissioner Paul Atkins. Atkins laid out a stunning vision, a future where all financial assets, not just crypto, but stocks, bonds, money market funds, move across blockchain-based rails and decentralized finance, DeFi protocols. The project? It's called Project Crypto. Hougan calls it the most remarkable speech I've ever read from a regulator.
The first is one we talked about earlier, which is these documents are there for you to read. I really do mean it. Go read this speech from Paul Atkins. It was on July 31st. It's a remarkable view from the world's largest financial regulator about what financial markets are going to look like in the next 5 years. And it sort of gives you a roadmap for some of the more interesting areas to consider for investing. So you can do that. It takes about 10 minutes to read. I think those 10 minutes will be extremely well invested. The other thing I would say is, there's a temptation in crypto to try to trade because assets trade 24/7 and they're very volatile and it's very exciting. And I think it's completely fair to speculate on short-term movements with a portion of your crypto portfolio. But if I had one thing that I've learned over 8 years almost of working in this industry is my ability to forecast what's going to happen in the next week is really rough. I actually don't know. I work in this industry full time. I have a team of research analysts. I don't know what's going to happen in the next week. But if you ask me what's going to happen over the next 5 years, I just have huge confidence that crypto will be more important in 5 years than it is today. And what that means, again, is not that you have to just buy Bitcoin and forget about it and never trade anything. But with a portion of your portfolio, I think it's reasonable to take a very long-term view because, again, the confidence I have on where we'll be 5 years from now is much higher than the confidence of where we'll be in 5 days. Up, down, sideways, your guess is as good as mine. But over that long time period, I'm really confident on where this Web3 industry is going. But I would encourage people to read a speech by our SEC chairman, Paul Atkins, which just came out last week. It's called Project Crypto. And the SEC is the most important financial regulator in the US, directing the largest financial market. Project Crypto lays out a vision for all financial assets to move over blockchain-based rails and to move on DeFi protocols, to move in single apps, but not just crypto assets, stocks, bonds, money market funds, all financial assets. I think it's the most remarkable speech I've ever read by a regulator. It lays out a vision that would make someone who is pro-crypto, pro-Web3 almost blush. It's almost more bullish than I am about the impact that this has. And if the leading regulator in the US wants to move financial markets onto blockchain-based rails, there's a good chance that that is going to happen. So I think, look, blockchain and Web3 is just a fundamentally better technological infrastructure for the movement of assets with value. It's like the internet for value. It's all the things we've been talking about for the past 10 years. But now regulators and legislatures are lining up to help make that happen. I would, again, encourage everyone to go read that speech. It's hard to read it and not be extraordinarily optimistic about where this industry is going.
As the space matures, Hougan urges investors to adopt a long-term mindset. Yes, crypto trades 24/7. Yes, the volatility is tempting. Yes, it's exciting to chase short-term gains. But the real wealth, he argues, will come from holding long-term positions in quality assets with strong fundamentals. He admits, even with a team of analysts and full-time involvement in the space, predicting where Bitcoin will go next week is anyone's guess. But when asked where crypto will be in 5 years,